What's up, YouTube? This is your Mask Investor here on Trading Edge 4P. Everything I do here is for entertainment and educational purposes. If you'd like to join my journey from $500 to $1 million, please subscribe as well as follow me on Twitter. So without ado, let's check out the portfolio. In terms of the actual portfolio itself, it went down. We're still up about $5 overall in the portfolio, which is not bad. As you can see, the overall portfolio, if you calculate all the earnings that we have here, minus our loss on Barrick Gold, it actually doesn't go up to $5. It's actually more of a minus than anything. The reason why we're up $5 is because we actually got paid some dividends, as well as sold some stocks on profit. I believe going forward, we're going to try a new strategy. Strategy itself is very risky. It'll also depend if I could sell my Barrick Gold stocks, the remaining of it. If it does reach about $30, I'll probably sell about 7 shares to at least break even or go a little higher to attempt to do what we plan to do in this, which is called dividend diving. The real name to this is dividend capture, but we're going to call it diving. Difference is that a lot of people, what they do is when they do something called dividend capture, they think twice before they dive into doing it, because obviously overall it's not really beneficial and most people lose money. In our case, we're not going to think, we're just going to dive right in. So we're going to dividend dive. We're going to dive into one sector, very, very specific sector, and that's the banking sector. Why we're going to dive into the banking sector? The banking sector is a little less volatile. It's rare that it jumps up and down pretty significantly, and it's a pretty safe sector to try this upon, as well as the fact that there's 6 major banks, and they go through the same cycle. In this case, obviously we've missed out on the first 2, and you saw before I did move from TD to BMO. That was actually a mistake. I should have went into Imperial Bank. I kind of misread the dividend EX date for BMO, assuming that it was in December when it's actually in January. So due to that, we missed out on Imperial Bank dividend, but it's fine. We're going to sell this off on Tuesday when the markets open up for Canadian markets. We do celebrate Boxing Day, so markets are closed. American markets are open though on Monday, so I'll probably be active, but more or less on my personal account. We're going to do this dividend dive because we don't have the same benefits as we do in the US. In the US, they have a lot of IPOs, they have a lot of SPACs, it's a lot more volatile, it jumps a lot easier, easier profit. Canadian stocks a little different, it's a different beast, right? Comparing oranges and apples. So we're going to do this the same way, we're going to process it differently. So we're going to dive what we call is a dividend dive. Diving into the banking sector only, that's the attempt. What is a dividend capture? What is a dividend dive? First and foremost, let's get on the screen. It is basically when someone purchases a stock right before the dividend EX day, so that on the dividend EX day, their name shows up as a shareholder of the actual stock, so that when they do pay out dividends a few weeks later, they get paid that dividend amount. So what people do when they do want to capture this is they jump from one stock to another stock, constantly getting onto the day before the dividend EX day, so that on the EX day itself, their name shows up and they constantly get paid. The downside of this in past, like I said, in the past, is one, first and foremost, a lot of stocks don't keep its price. Most of it tends to go down on dividend EX day. It sometimes goes up, breaks even, so forth, which is fine. The downside as well is transaction fees. A lot of brokers do charge transaction fees. Could range between $5 and $9 when you buy and sell stock. That comes up to about a good chunk of money in your portfolio, unless you do a huge amount for dividend diving. Benefit we're using Wealthsimple. It's a Canadian version of Robinhood. 0 fees, 0 transaction fees, 0 commission. As long as you stick with Canadian stocks. So by doing dividend diving on Wealthsimple, I don't lose out on the transaction costs, which is pretty significant. Because of that, we're going to try this with Wealthsimple. Obviously, there is a link below if you'd like to join Wealthsimple. Will mutually benefit if you do trade over $100 on it. But I won't go into too much detail. We're going to talk more about dividend diving. in this situation. So before we go into too much detail, let's jump into the first stock on the list itself. Do note that we've already passed this in terms of the ability to dive, which is the National Bank of Canada. It's one of the, we call Big Six. Dividend EX day was December 23. Obviously, it's passed. Paid out pretty decent, 3.96%, but only because stock has gone up pretty fast. That's the first one that we'll probably recycle later on when it comes back to them. Next one on the list is the Canadian Imperial Bank, which should have been the one that I should have bought instead of BMO. Kind of misjudged the dates on it. I think this one, it says here Dividend EX dates December 24. I actually have December 28 on my list. So it might be a little different based on what Yahoo says and what the TSX says. But either or, Dividend EX date, we passed this one. But that is the second one on the cycle of 6. Next one here is Bank of Nova Scotia. That's the one we're going to jump into as soon as we can. Dividend EX date is January 4, 2021. So obviously we're going to sell our BMO shares. We're going to jump into this. If Barrick Gold skyrockets magically, we'll probably buy more shares than just 1 or 2, maybe 3 or 4 if we can, depending on how high it goes. We won't sell it on Barrick Gold. We do have a pretty high price target on it, between 33 and 36. But obviously that's a yearly target that, and we'd like to hold on to just a hedge in case of inflation. You never know, especially with the uncertainty of 2021. But we'll dive into this one at least on the 4th. Basically buy it when the market opens on Tuesday, and basically on the 4th of January, once it reaches that, we sell it. So we could immediately jump to our next position, which is TD. TD has an EX day, which is 3 days later. Wealthsimple gives about a 2-day delay in terms of actually filling in the purchases to make sure that you are a shareholder on EX date. I believe the delay is 2 business days. So if we do sell it on the 4th and buy it on the 4th, obviously the selling is going to have a delay of about 2 days, but we don't care about that. What we care about is being a holder once it hits the day before Dividend EX. So on Dividend EX, we are a TD holder. It should work in theory. So once we do hit that mark on TD, we move on to the next one, which is RBC. RBC is the king of all kings of banks. I hold personally a lot of shares of this in my personal account for long-term reasons. We'll probably see how much we could see in terms of diving into this one. Probably going to be 1 share unless I'm able to get rid of my Barrick Gold stocks. And then after that, the last and not least, BMO. So once we finish with BMO, obviously the cycle renews, goes back to National Bank and so forth, and recycles. I'll have to double check to make sure that the Dividend EX dates are the same. But overall, when it comes to the actual portfolio, we could see that we do have some leverage and room. We're going to see if we could raise up this percentage gain. Obviously, I didn't really hit the mark of about $600 by the end of the year, which is fine as well. It's an unrealistic target. I do have another unrealistic target is to reach $1,000 by next year. If I'm able to do that, I should be able to ramp up to $1 million a lot faster, because the point is I need to double up at least every year to stand a chance, or maybe double or more. So if I'm able to do so, it'll basically grow the portfolio a lot faster. Obviously, if this trick works, we're going to keep doing it. Obviously, holding on to other stocks like Enbridge, Brookfield. I do have a pretty small gamble on Revel, which is about $33.75 shares. It's penny stock. I spoke about it last week, but I do have some high insights on it, and I do feel that this might grow and skyrocket. If it does, and jumps to an example, $1 or maybe $2, that already basically bursts our portfolio to succeed, and hopefully it does. Like I said, Revel is one of our wild card in our portfolio. Barrick Gold is more to hedge against inflation. Enbridge, I feel it's a long-term stock. A lot of people do have questions about it, but overall, it's a good business. It'll be here for at least a good 5 to 10 years. Oil, renewable, natural gas, everything's important. Everything goes through pipelines, the quickest, safest way. People don't like it, but hey, you go with what works, and they do have some sort of monopoly close to it. So that's what we have this week. I'm sorry for the delays in terms of posting a video this late, but other than that, we'll post another one next week. Shortened week for stock exchange as well, due to New Year's. But then after New Year's, everything should be good old trading days of 5 days a week for a pretty long time to our next holiday. But at least you'll have a constant update, and we'll get to play a little more in terms of our portfolio. If you guys have questions or any suggestions, by all means, send it up in terms of the YouTube channel. If not, you can also send it up on Twitter. I'll be glad to look into it and see what other tricks and techniques we could try. And I'll try to look up some stock suggestions. If you guys want me to look up some, we'll do so. All right? Later.